Hey everyone, I'm here with my personal finance broker, Matt Kerr. Matt has been my broker for the last 4 years with mostly residential properties. He does everything from first home buyers, investments, builds, small developments, and some commercial as well. His firm, Insider Finance, has done almost $100 million of loans in the last year, and he's got a corporate background and very professional, knows how to get the most money out of banks, especially with out of the box scenario. So thanks so much for jumping on, Matt. Really appreciate it.
Pleasure, Adam. Thanks for having me.
Awesome. So what we're going to talk about today is interest rates and what the feedback has been from the banks, how this is going to affect lending, and ultimately, I suppose, property prices and how much more money we're all going to be able to borrow very soon. So I'll hand it over to you with the insider scoop on where banks think the interest rates are going, where you think the interest rates are going, and I might throw my 2 cents in at the end as
Yeah.
well.
No, it's obviously a hot topic. People have been waiting very patiently for a rate cut to come through. So a couple of the bigger banks, CommBank and ANZ, their economists have come out and suggested that we could be a chance in February to get a rate cut. I think that's maybe a little bit bullish potentially. I think they might want to wait on that first quarter CPI data to come through just to confirm that inflation is back under control. So I think May is the more likely, but it is complicated a bit by the fact that we do have an election coming up that needs to happen before mid-May. So will it become political, and will there be pressure put on the Reserve Bank to get a rate cut through prior to the election, and the government can go into the election on the back of a rate cut or two? That would be desirable from their end, but obviously they're not supposed to influence what the Reserve Bank does. So
no, of course not. They wouldn't do that.
Of course not. So it'll be interesting to see how that unfolds. I think there's enough comfort from people in terms of we're going to get rate cuts, whether that's February, whether it's May. And when we get one, we should get two or three. And certainly, looking at the RBA rate tracker on the ASX website, it's certainly, I think the last time I checked, as of yesterday, the market was giving a 78% chance to a rate cut in February.
Wow, 78% chance. Crazy.
78% chance. So
we'll see.
And the other part of that is just looking at the futures yield curve, which is pricing in about 3 rate cuts between now and November.
Okay.
So whether we see one in Feb or May, chances are that we'll get a few.
From what you've just told us, 78% of people think that's people voting, isn't it? In that.
It is. Yeah, it is. It's actually ticked up. I mean, it's on the ASX site, but it's just a daily forecast. Yeah. And it's ticked up from low 70s to 78 just in the last week.
Yeah, well, there you go. Well, I'm of the same view. I think February is probably a little bit premature. We do need one, whether it's February. I think it should be between Feb and May. I think May might be a little bit late in the piece, but and I think it will be politically driven. It normally is.
Yeah, I get the sense that they'll apply enough pressure. And but yeah, it'd be interesting because election in May and then Reserve Bank meeting early May. It wouldn't surprise me if we went to the polls on the back of a rate cut.
Yes. So we'll soon find out in the next few weeks what the RBA is doing, and maybe if you're listening to this video after the RBA has already cut rates or put them on hold, whatever happens in February, maybe this will all change. But I still tend to agree, and I think a lot of people do, that we're in for fairly substantial rate cuts this year, whether that's 3 or 4. I know various different banks are forecasting 3 or 4 rate cuts of 0.25%. I don't know why they just don't do it as like 0.1% and just see what happens. Like, let's just drop it by 0.1, see what happens, rather than just going straight with the 0.25. But what do you think is going to happen to the market? And you're in the lending space. People are borrowing money. What's it going to mean for the average borrower in your space?
Yeah, I guess there's probably 2 parts to it. It's the borrower psyche in terms of, okay, we've had one rate cut, that's great.
Yeah.
And they're predicting 2 or 3 more, right? Let's get into the market. So there's that psychology of the borrower and the buyer against what does it actually mean in
Yeah.
terms of your borrowing capacity.
But has
So
that already, that's psychology, well, it's psychic, has that already started to happen now? Now that people know that there's rate coming? So has that ship already sailed in a sense? Like,
yes and no. You
like
know,
when
I
you,
think
oh, sorry, go.
yeah, I think people have been holding out for quite a while for the rate cuts. I think some people thought we might see them at the back end of last year. So I think
Yeah.
people have somewhat sort of gone through that. Okay, yep, we're definitely getting one, to maybe listening to the media a little bit too much and maybe starting to think that we won't get one because, unemployment in particular has remained pretty steady. So, but yeah, to a certain degree, I think people have got comfort that we're at the peak and that they're going to come down. And then it becomes, partly about, right, so what's that mean for the market? Is the value of property going to go up as soon as the rate cuts come through? Should we try and get in now?
Yeah.
And, obviously, people are still limited with capacity in a certain degree. But yeah, sort of
Yeah.
two parts to it.
So what does that one rate cut mean for borrowing power? So if the average person's got $500,000 in borrowing power, what's a 0.25 just roughly? What does that mean you can borrow? How much more money can you borrow off
Yeah,
the back of that?
I'll give you a live example. Just give me one sec. It'll be different for different people, but
Just a general rule of thumb. My thinking would be if the rates are at 6% at the moment, it'd be the ratio of 0.25 versus 6%, just as simple maths, or whatever that works out to be. 1/24th, if I can do maths right.
yeah, look, it's not as much as people think a lot of the time. 677.
Well, I would think it'd be 1/24th. So if you're 500,000, well, so it's just under 5%. So it might be another, well, yeah, 24th is a quarter.
Yeah,
It'd be 20,000. My guesstimate would be,
for a straight, if you've only got one debt, if you're looking at buying your first home, for example,
yeah,
it's going to be around 20 to 25,000.
yeah,
Uh,
yeah.
Bit different if you've got existing loans and you're getting a reduction across those existing loans as well. But in general, look, it's not a huge amount. But by the time we stack up 2 or 3, if you've got some existing lending in place, it could easily get to over 100 grand
Like
as in your capacity quite comfortably.
yeah. So for the average person or the person buying their first home, it's an extra 20 grand. That's only on one rate cut.
Yeah,
So you couple that with 3 or 4 rate cuts, that could be an extra 100,000. So that $500,000 house
yep,
could easily go to 600,000 just from people's borrowing capacity.
exactly. Yeah, absolutely. Yeah, it's going to bring in obviously more people into the market.
Yeah.
Just through people being able to afford more. So,
Yeah, and the cycle starts again.
Yeah, correct. Exactly right.
Interest rates come down, but not every time interest rates have come down, the market has gone up. So we've all got this fallacy because we've seen interest rates climb the last however many years it's been, 2.5 years, seen interest rates climb. But if you look back on history, not every time we've had an interest rate decline has the market gone up. In actual fact, there's been plenty of times where interest rates have come down and the market's gone down too. So just because you've got lower interest rates does not mean the market will go up. Now, I firmly believe in certain areas where there's limited supply, there's high affordability, or there's investors driving the market for a return, as in for a rental return. If you've got 10 people fighting over one property because there's no supply, and these 10 people all of a sudden have an extra 20, 30, 40, 50 grand in borrowing capacity, well, they're just going to keep bidding the price up.
Yeah, absolutely.
If you're in that market cycle where it's still growing, so there's still plenty of areas around the country where there's still a lot of affordability and also the rental yields are quite high. So if rental yields are staying at 5-6% and interest rates are dropping, then it's a good investment proposition for somebody.
Absolutely it is.
Jumping in, getting a positive geared property. And I think that those areas will do well. But then if you look at other markets like Melbourne, I'm going to pick on Melbourne. Oversupply. There's not a lot of buyers in many areas. There's some areas that go against that, but I'd say for probably 90% of Melbourne that I've looked at,
Yeah.
more, they've got oversupply issues, they've got affordability issues. So an extra 20 grand on that is not going to make much difference in my view, because you've got, instead of 10 people fighting over one property, you've got one person with 10 properties to choose from. So just because they got more money in their back pocket doesn't mean they're going to give it over.
No, that's right. Exactly right.
And
Yeah.
also the prices are higher as well. So
Yeah.
generally when the prices are higher, people normally put in more deposit, so they're using less of the bank's money. And
Mm.
I've found when people spend their own money, they're a lot more astute with it, or they're a lot more stingy, if that's the right word, frugal.
Most definitely. Yeah.
Whereas when
Yeah.
they're getting, and I've heard this from some real estate friends as well, they're like,
Mm.
one in particular who went from commercial property to resi, and he just said, I can't believe how much people bid the price up. And he's like, because it's not their money, they're borrowing it from the bank. Whereas in the
Yep.
commercial world, a lot of it was cash, and
Yep.
they'd be haggling hard because it was their own cash, or it'd be
Mm.
50% gearing. So
Yeah. It's a
what do
good
you
point.
think? Do you agree with me? Not agree with me? I'm sure there'll be plenty of comments on
Yeah.
agreeing,
Yeah.
disagreeing.
No, I definitely agree with you. Like it, anecdotally, I suppose we see more of an impact from government changes around concessions for first home buyers and that type of thing, as opposed to what a rate cut or two
Oh,
uh,
okay. So fueling the market
people for
with money
fueling
from
the
the
market.
government. Yeah.
Yeah, yeah. But like you say, it's an interesting point around, yeah, when you are negotiating for a property, treat it as though it's your money that's sitting in the bank that you're using to buy it. I think it's a good point in terms of the mindset that you should use when you are looking at a property. Just because you've
Yeah.
got access to the cash, just because you're getting, a $30,000 grant, you're not paying stamp duty. The bank's going to give you the money. It's still money, and you still got to pay
Yeah.
it back.
Yeah. You
I
still got to work. You still got to work your ass off to pay that back.
Yeah,
So
absolutely.
if you
So
go to an
one,
auction and bid an extra 10 grand, it fathoms me how many people will happily go out and buy a $500,000, $1 million house, but they
mm,
balk at spending $6,000 or $7,000 on one of my courses. And it's like,
yeah,
you
yeah,
can be at an auction or be negotiating, and you can bid the price up by 10, 20 grand in one go. So
yeah, yeah,
if
yeah.
you
Or
don't have to pay that 20 grand, don't pay the 20 grand.
don't pay it, and even engaging buyers agents. I've got
Oh,
nothing against buyers agents, as there are good ones out there, but younger people don't seem to bat an eyelid at
yeah,
paying a buyer's agent 2% to go and find the property for them.
yeah.
Uh,
And half
which
the time the property's on market anyway.
exactly, yeah, it's pretty rare that you see someone who's found one off market or door knocked and got a great price for it.
Yeah,
So
yeah, very, very rare. I've had
yeah,
my fair share of buyers agents feeding me rubbish stuff, with all due respect to buyers agents. I'm sure there's some good ones out there, but I
yeah,
reckon that'd be the 0.01%, and they just all follow the herd. That's why markets like Perth have gone ballistic, regional markets,
yeah,
because buyers agents are driving those markets heavier than what they ever have been.
yeah,
And
yeah.
one buyer's agent can bring 50 clients with them. So
Yeah, exactly. So
the
it can have an
first
impact
the
on the
first few
market.
the first few clients that get into that area, they'll do well because the rest of the 50 clients will pump the market. But
Yeah,
there's going to
yeah,
be someone left holding the baby at the end of the day, and that's going to happen over the next few years. So
yeah.
I don't want
Sort
to
of
say
seeing that
so, but I've
thing.
seen it too many times before.
Yeah, yeah. We're seeing that a little bit in Perth at the moment. We've had some clients who got in at the right time and
Yeah,
they've done really well.
some of them are
Uh,
probably my students as well.
been, yeah, yeah. And certainly when they bought, getting fantastic yields as
Yeah.
well over there. And there's been price movement, but it seems to have sort of plateaued a little bit now. So
Yeah, different areas. I've seen areas have phenomenal growth in Perth, areas that I shortlisted 2 years ago, phenomenal growth. But yeah,
yep.
the growth is slowing. And I think, like
Mm,
you're saying, the yields aren't there anymore. People aren't going on realestate.com and buying a Perth property at 6, 7% yield anymore. And if you're getting a property in Perth at 4 or 5% yield, why are you buying
mm,
in Perth?
yeah,
You can buy in Melbourne with better yields now. And
yeah,
that's the capital
exactly.
city. So
Exactly. Yeah,
so
yeah.
people are starting to realize that.
think so, and particularly in townhouses and units where you've got strata costs on top of your other expenses, with the cost of insurance having gone up so much in the last couple of years, those strata costs are through the roof for a lot of people. So, even though you might be getting a bit better yield, that seems to be getting eaten up by, the body corporate expenses, which is kind of defeating the purpose for some people.
Yeah, absolutely. So synopsis is interest rates are coming down in 2025. Whether they'll come down by 0.5%, 1%, I reckon it'll probably be closer to 1% personally. And is it going to start February, May, and when's it going to end? Or it's probably going to trickle over into 2026 as well.
Well, it'll be interesting, won't it? Michelle, the governor sounds pretty cautious. I think she'll, based on what's happened over the last few years, I think when they cut, it'll be 25 points, and they'll give it time to really have a look at the impact. And chances are it's not going to have a massive impact. No. But I don't know. I can't see them going back to back. But yeah, I still think we'll get at least 2 or 3 during the year. And
I'll happily welcome those interest rate cuts, but just not too soon, because you don't want to. I don't think we should fuel the markets that are already in heavy undersupply. I say give it a little bit longer to try and give some supply into those heavily undersupplied markets. Because that's where I think we're going to see the biggest impacts. Those first home buyer or those heavily driven investor markets, where it's going to fuel them even more, and regionals, which is the investor driven markets.
Yeah, correct.
High yields, low prices. So we'll see.
Yeah.
Hold off a little bit longer, because even with interest rates going up, we've still had markets, go up as well.
Yeah, exactly right.
People can still borrow money. It's just not as much. But if you're working in Sydney on an average $100,000 or $150,000 job, I say average because there's a lot of people on that salary in the capital cities. You're looking at a property in Perth or regional Queensland or Adelaide as being cheap. $400,000-$500,000 properties are cheap there in comparison to Sydney. So
completely. Yeah, it'll be interesting to see how those markets react. That's for sure, with a couple of rate cuts. But I think we can be confident enough to know that we're going to get them. So hopefully, I agree. It's not
go hard and buy property, but do my course first, so you structure everything right, so you can actually buy 10 properties instead of 1.
Yeah, absolutely. At the start of your journey, make sure you get it right from the start. And
don't come to me after you've bought 3, because it takes time to fix stuff.
Correct. Yep. Get to a good accountant and do your course.
All right, we'll leave it at that. Thanks so much for your time. Really appreciate it.
Pleasure, mate. Chat soon.